What is up, YouTube? Stocks by the numbers. Wanted to come back to you today here. This is something a little bit different. This is something that I know a lot of people not very familiar with this company. This is an old chart, as you can see, going back to the 70s, and we're talking about absolute explosive growth and expansion here. The name of the company we're looking at here, Coca-Cola Consolidated Incorporated. Ticker symbol COKE, listed on the NASDAQ. Now, I know I recently brought you guys Coca-Cola, which we know, brand name company, been around over 100 years, pays a dividend, good stock to own. This is the bottling facility. Okay, so we're bypassing the parent company, we're taking a side road. And now this is almost like a third-party company, you can say, but as you can tell, over the years, over the decades, this is something that definitely might be worth owning. The company, just going back here to 2015, was, sub $100 a share, and recently hit almost $700 a share here. So that's what, 7-8 year hold? And you could have made yourself several 100% with, of course, the DRIP going on as well, because they do pay you a dividend. Again, the DRIP, DRIP, stands for the Dividend Reinvestment Program, and you look for the DRIP when we're talking about compound investing. But right now, COKE, $551.76 a share, down half a dollar here on the day. And this company really has been rocking and rolling. And I'm going to show you guys some of these numbers here. We have a market cap $5.17 billion. Company's yielding 0.36% of this price as a dividend. PE, price to earnings ratio, of only 12, and the company is earning almost $46 per share. That is absolutely phenomenal. Looking at the EPS side here, you can see for the quarters, just coming in well above estimates here, almost $15 a share in Q3 of 22. And then you can see estimates pulled back, and so did their actual EPS numbers as well. But look at the estimate, $7.22 a share. The company comes in $13.56, right? Almost a 90% surprise beat on the EPS side. These are not numbers to sneeze at, folks. And you can see here, looking annually, not only does the revenue climb 4.6 billion, 4.8, 5, 5.5, 6.2, but also look at the profit margin. Right, struggling back here in 2018 was a rough year for the company, slightly negative net income. 2019, slightly positive net income. Then in 2020 and 2021, you can see the profit margin hovering around 3.4%, and then 2022, more than doubling it, over 100% move on the profit margin side, jumping from 3.4% to almost 7%. So this company definitely rocking and rolling for the last couple of years, especially the last couple of quarters, looking at the EPS side. And of course, if we pick any time frame, the company is up. Now, again, this company engages production, marketing, and distribution of non-alcoholic beverages, around since 1902, based out of North Carolina. Here is their website, and I wanted to show you the website because, as you see, nation's largest Coca-Cola bottler, been around 120 years. Look at this, they're everywhere. 11 manufacturing facilities, 60 distribution sales centers based out of North Carolina. And look at these brands here that they're bottling here. I mean, just look at some of these beverages here. You got some Dr. Pepper, ginger ale, Barq's root beer, Coca-Cola, we know, Powerade, which I know is pretty popular. You have Monster Energy and the NOS energy drinks. We have some Sprite, we have the Cokes. Look at this, Body Armor, Minute Maid, green tea. I've seen that around. Vitamin water. I mean, this I know is vitamin water is now owned by Coca-Cola, but still, you get the point here. Look at all these different beverages. These are all popular beverages too, which is probably why this company just continues to climb year over year. Rated Forbes 2023, one of America's best mid-sized companies there. That's a good little feather in your cap. But again, overall, just look at this. This is definitely something that, in my opinion, you should really consider owning. If we switch over here to the financials, we're checking out some of our statistics here. Look at the PE. It has been bouncing around, non-existent here in 2018. Again, they were net income negative, right? So there is no PE because there was no earnings, or negative earnings, if you will. But you can tell over the years, it hasn't been as low as it is right now. It was 11.2, but we looked and we saw 2022 was like a phenomenal year for the company. And they look like they're just going to continue to trend higher and higher, in my opinion. So this PE definitely makes the stock attractive in my opinion. The price to sales ratio here at 0.83 is kind of in the middle of the low and the high going back to, what is this, 2016. So I wouldn't really say that is a massive indicator. However, it is sub 1, right? Price to cash flow, trading 9.3 times cash flow. As we see here, there was one or two other occasions where it was less than that. However, it was double digits for several years and then almost got back to double digits. Now it's, again, 9.3 sub double digits, so you may have some growth here coming up. Trading 4.64 times book value, minus last year of 4.31 times book value. This is the lowest that it's been since 2016. So we have some very good fundamental analytical indicators showing us that this company is a screaming buy right now. Looking at the profitability, again, was slightly positive, dipped down to slightly negative, came out slightly positive. That's basically the trend for a lot of these profitability ratios. But then look at the last couple of years. It jumped up to 5% return on assets, north of 5.25, doubling to north of 11% here, where it's sitting at 11.18% return on assets. Return on equity, healthily positive, goes negative, slightly comes out positive, has a massive jump up to 40%, down to 31%, and then rebounds back up to north of 47% where it's currently sitting here. Return on invested capital, same thing, bouncing negative, slightly positive, gets back to double digits, takes a massive jump here to 24.84% return on invested capital. The gross margin percentage, again, decreasing from 38.4% back in 2016 down to 33.86% 2018, and then basically slowly climbing since then up to north of 35%, north of 36%, now sitting almost 38%. The operating margin, again, same thing, basically slowly climbing, dipping down to about 1.5% here back in 2018, and then more than doubling to 3.5, almost doubling again to 6.2, and just consistently climbing 7.8, 10.3, now at 11%. EBITDA, once again, earnings before interest, taxes, depreciation, amortization. Our EBITDA hit a low of about 5.6%, and then has slowly since been climbing up 7.25, 9.75, 11%, 13%, now 13.75%. And of course, the net margin we looked at before, slightly positive, went slightly negative, came back positive, 3.4%, more than a double, up to 7%, now sitting 7.5%. So all of these numbers, all of these fundamentals that I'm looking at here look absolutely phenomenal for this company. We looked at all the different products that they make, and I just want to switch over here to stock charts very quickly because as you see, the company has basically been in an upward channel since, I'd say, the end of September, early October, right? So if this is the low trend line, you can see it's basically right around like the low 500s, and the company obviously just raged, had a nice big pop, and has since hit this top Bollinger Band and has been pulling back a little bit. So in my opinion, right here, maybe this 50-day moving average might be your short-term low here, 510. But then you also have the 200-day moving average here, just slightly below 500 at 498.62. So this may be a range it'll bounce in and out of in and out and around of, excuse me, and you could potentially get it at a little below 500, but even low 500s, obviously it would be more attractive than 551. However, based on the numbers we looked at, again, these are the numbers based on a stock at $551 a share. So it looks attractive at 551. Obviously, if it gets down to 510, sub 5 is just going to be even more attractive, in my opinion. MACD just consistently increasing, touching a couple of crosses at times. Looks like it's potentially curling downward again. That's why I'm saying you may have a little bit of a pullback, but it's just going to be a slight sell-off. I don't think it's going to be anything to be worried about here. RSI 58.5 still has some room to grow, also has potential to sell off. RSI on the weekly, same thing, about 59, right? So it's in that mid-range, could kind of go in either direction. But, again, the 50-day moving average here on the weekly, 497.38, right? And we were just looking on the daily, and the 200-day moving average was, I think, like 498 and change. So that's why I'm saying you have the 50-day moving average on the daily is $510, and then you have these potential lows of support in the short term of $497, $498. So you may be able to get this low 500s or even slightly below 500, which, of course, again, to reiterate, I would say is a screaming buy in my opinion. MACD has been slowly rising since October and, still climbing here. But again, near the top Bollinger Band, and it might just sell off a little bit, come back to the mid-range, and this Bollinger Band, this range here is probably going to tighten up. And in my opinion, it's going to pull back to that level, and then that's when you're going to see another leg higher back into the 600s. And most likely, if you give it some time, again, in my opinion, you can easily see 750 a share, no problem, no problem. And I think it's going to happen inside of about the next 3, 4, 5 months. Again, going back to those forecasts, those estimates that we looked at, just to quickly bring you back, financials, quickly bring you back here. Earnings, right? And we look at the forecast. Look at this, comes in at 48.75 a share. Estimates were only 36.66. Look at the next year's estimates, 38.94, 41.31, right? So this company is posting EPS estimates in 2022 that probably weren't even forecasted for their growth until 2026, 2027. So on the EPS side, the company's kicking ass and taking names. And even on the revenue side, coming in $6.2 billion, above estimates of $5.93 billion. And look at 23, $6.09 billion, 24, $6.26 billion. So that's why I'm saying, you give this a couple of more months, we're going to be officially halfway through 2023, and I'm telling you, analysts are going to see that this company is probably more than likely going to decimate these EPS and revenue estimates, and that's when, you know, big boys are going to increase their position, or someone's going to increase their price target, and it's just going to be better and better for this company moving forward. But yeah, I'm going to leave it there. We looked at a lot of things, and overall, Coca-Cola Consolidated Inc., Coca-Cola Bottling Beverage Company, COKE on the NASDAQ, has been a winner, and in my opinion, will continue to be a winner. And I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. If you appreciate the content, please push the subscribe button. It means a lot to me. But like I always say, if you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. And I understand that markets are rocky, they're volatile, and they're uncertain. March just started. Markets today were slightly negative, got relatively flat, and then basically broke out, took a leg higher, and finished healthily green, up almost 1% across the board. So I hope that the jump today helped out a few of you guys watching. And again, stay positive, stay focused, stay disciplined, and I'm telling you, continue to better yourself every day. And before you know it, you'll be moving into the end of March and April and May, and you will be in a significantly better position than you are today. I really wish you all the best of luck. I want to thank you guys for stopping by, and I'll see you in the next video.